Hello everyone. I don't understand how I get these videos so long. I already recorded one today. Figured it'd be about a 7 or 8 minute video. Ended up being 20 minutes, so I'm redoing it. Yesterday I traded Apple calls. I'll just go back and just do a real quick look at it. I entered, I believe it was right around here on this pullback. Actually, I think it was here. I entered about here on this pullback. Sold up about here, 21% winner. Didn't make a video on it, but today I traded Nvidia twice, and I'll show you what I was looking at. Gap up, pre-market highs about here. We held close to pre-market highs. I tried to get in right after the open. I had an order in at 9:31. Actually, I canceled it at 9:31, so I put the order in almost right at the open. I think what it was, when I watched it come down here, and when it started to bounce back up, popped above the cloud, that's when I put my order in. Didn't get filled. My order was for $1.08. It actually went to like $2.24 right here or something, so it could have been 100+% winner. Didn't get filled, didn't chase it, and it's a good thing I didn't, because you see what happened after that. I did get in at 9:40, right pretty much at the open of this candle here. This candle here. Pretty much the open of this candle. We had a red candle, it came down, it held the bottom. As soon as I started green here, I went ahead and got in. It was a little bit riskier trade because I didn't wait for any type of confirmation. I saw green and was kind of assuming there would be a bounce off of this cloud. My stop was below the cloud, so it would have been okay. It wouldn't have been a big stop. I ended up selling 1/3. I paid 91. I sold 1/3 at $1.03 up here at 9:41. Sold 1/3 of it for about a 11-12% win. I stopped out of the rest at 9:48, and I'll explain why. We had a dark cloud cover here. This is considered a dark cloud cover. If you're not familiar, you need to learn candle patterns, candlesticks, candle patterns. If you use Thinkorswim, come over here to patterns, right here, patterns, select patterns, candlestick, and you have all these choices. These are what I have: dark cloud cover, doji, engulfing, hammer, piercing line, and shooting star. This is a dark cloud cover. Dark cloud cover is basically the candle has to engulf the top and go at least halfway through this candle, past the midpoint of this candle, which is right here. So this was a dark cloud cover. On a dark cloud cover, you want to wait for confirmation, which is a trade, not a close, but a trade below the bottom of this pair, which is this one. That line is right about here. Don't look at the cursor, look at the line here, because when I hold it here, it's hard to see. Pretty much this line here, and as soon as it started to trade below that, that's a put confirmation for the enter puts. Once I got that confirmation to enter puts, I got out of my calls, and it's a good thing I did. It ended up being like a 5% loss, 5 to 6% loss on a smaller position. So it wasn't a huge loss. If I would have held out any longer, you see where it would have went to. I ended up entering a second position at 10:12, which was right here. I entered calls right here at 10:12, figuring this pivot point was going to be my stop. I paid 56 cents. I added to it at 10:18, which was the open of this candle, because it was right at that pivot. This was a higher risk trade. I was looking for a bounce off of here. I figured if it didn't bounce, as soon as it broke below here, I was going to get out, so it would have been a pretty tight stop. My average ended up being 51 cents. I stopped out at 10:28, which was right after the open of this candle. It came down to here. Basically what I was looking at is it broke these lows here, so I went ahead and got out. Got out at 45 cents. My average was 51. It was like an 11% stop. But the crux of this video is to show why to look for exit signals and why exit signals are more important than entry signals. You know, I saw an entry for puts here. Actually, right here, saw an entry for puts here. This was an entry signal for puts right at about this level, and that's it. Time for me to get out. I could have hoped, dreamed, and wished, and took a lot bigger loss. This would have been about a 40% loss, but I didn't. I did a market sell as soon as it broke below this level, below this candle here. As soon as it broke below that, I got out. Same with here. My stop was this pivot point, this red dashed line. It came down. As soon as it touched below the low of this candle, I said, that's it for me, I'm out. Got out of that one. This one would have been probably another 40% loss if I would have held longer. As it stands, I had a 5% loss and 11% loss instead of two 40% losses. Exit signals are probably more important than entry signals, especially when it comes to stops. Almost every trade you take can be made a loser. Not every trade can be made a winner. And when I say that, what I mean by it is, let's say I got filled here when I tried to enter, and I rode it up to here and I didn't sell. I got greedy, I didn't sell it. Guess what? When it gets over to here, that's not a loser. So almost every trade can be turned into a losing trade. That's important to understand. Just because you could have made 100% here doesn't mean it's always going to be a winning trade for everybody. If you don't sell here, I mean, look how quick this happened. This was a 3-minute candle. In 3 minutes, if you entered right here, in less than 3 minutes, that trade went from a fantastic trade to a losing trade. So just keep an eye on it. Just remember that every winning trade, almost every winning trade, can be turned into a losing trade, but not every losing trade can be turned into a winning trade. So, all right, thanks for watching, and talk to you guys maybe tomorrow. Thanks, bye.